you've got this huge loss of confidence in the United States. I mean, right now you've got a loss in confidence in foreign central banks. They're buying gold, right? Foreign investors, they're buying their stocks. Besant is in denial of this. Right now, it's foreigners who are losing confidence in America. But in November, in the midterms, it's going to be Americans. American voters are losing confidence in the administration, in the Republican Party, because they're the ones that are steering the ship of state. And, they're steering it, off this cliff. And the voters know that. But, there are a lot of people, I think, that were hesitant to come into the market because they were waiting for a pullback. Well, we had it. It's over. You don't have to wait for it anymore. It's now behind us.
The erosion of faith in the United States economy is rapidly expanding from international markets to the domestic voting booth. While foreign investors may still be engaged in equities, central banks are aggressively voting with their wallets by accumulating gold, signaling a rejection of dollar hegemony despite official denials. This loss of confidence is expected to hit home by November, as American voters react to an administration perceived as steering the economy off a cliff. PeterSchiff, chief economist at Euro-Pacific Asset Management, identifies this sentiment shift as a critical turning point for markets. For investors who remained on the sidelines, explicitly waiting for a market pullback to deploy capital, the recent volatility provided that necessary correction. That phase is now viewed as complete, signaling that the hesitation period should end. With the correction firmly in the rearview mirror, the window to position ahead of the following significant upward move has effectively reopened. Now, we present the clips from PeterSchiff's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
But, there are a lot of people, I think, that were hesitant to come into the market because they were waiting for a pullback. Well, we had it. It's over. You don't have to wait for it anymore. It's now behind us. I think that's going to be particularly important in the mining stocks, because I think one of the reasons that the mining stocks were not rising spectacularly when gold and silver were making these new highs. And in fact, the day that silver made its new high above 121, most silver stocks were down on the day. So investors were very hesitant, thinking that there was going to be a big pullback. Now, they were right. We did have a big pullback, but now it's in the past. So I think some confidence is going to slowly be rebuilt. And I do believe that silver stocks and gold stocks will make new highs before gold and silver make new highs. And that's very bullish. But it also means that it's a great opportunity to buy into the gold and silver mining stocks. So don't just buy the physical metals. And you can do that, obviously, at Schiff Gold. And by the way, as I was warning, the premiums have widened. So even though silver went way down, the silver coins and bars that we sold, they went down too, but not as much. The drop wasn't as great because the spreads went up, because there was a lot of physical demand to buy the dip. The big collapse happened in the paper market where there is no physical. So that's another factor that you have to bear in mind. I do expect over time the demand to increase and outstrip the supply. And so that's going to keep pressuring the premiums on, especially the smaller coins and bars, 1 ounce coins. So get them now, go to Schiff Gold and get them. But these mining stocks, I'm confident they're making new highs long before silver. I think silver stocks will make new highs by a decent margin before silver gets back above 120, because I think the fear that kept the silver stock investors on the sidelines, I think that will slowly subside as the market starts to repair from the decline and move higher. And this is in sharp contrast to what's happening in Bitcoin. And look, this is obviously not a surprise to my audience. I have been saying this. I've been warning about this. I've been telling you, crypto guys, that the game is over and you got to get out while you can. Well, Bitcoin right now is at 72,500. Now, it's down. If you want to compare it to gold, Bitcoin right now is 14 and a half ounces of gold. In 2021, at its peak, it was 36.3 ounces of gold. Bitcoin is now down 60% priced in gold since its November 2021 high, right? This is 2026. Now, it's not November, but it's more than 4 years ago, not quite 5, but down 60%. And think about all the things that have happened with Bitcoin, because back then there weren't, we didn't have the Bitcoin ETFs yet. We didn't have the Bitcoin president. We didn't have the Bitcoin strategic reserve. We didn't have MicroStrategy, and I'm going to talk about them in a minute, and all the other copycat Bitcoin treasury companies, right? Despite all that, it went down by 60% in terms of gold. But even if you want to price it in dollars, Bitcoin is less than 6% above its 2021 high in dollars. In dollars. What a lousy return on Bitcoin. And remember, its whole claim to fame, the whole reason you're supposed to buy Bitcoin is because it's the best returning asset. Yet it hasn't been. And the best proof of what a lousy asset Bitcoin has been for most people, not for everybody. Yeah, if you bought it early enough, if you got in on the ground floor, yeah, you cleaned up, of course. But if you got in the last 1, 2, 3, 4, 5 years, which is when the vast majority of people got in, it's been lousy. And the best example is MicroStrategy. MicroStrategy's average price on about $55 billion spent buying Bitcoin is over 67,000, excuse me. Just over 67,000. 76,000, excuse me. Just over 76,000. We're now barely above 72,000. So he's down about 4,000 per Bitcoin. What is that, 6% or something like that? He's lost money on the Bitcoin. The biggest Bitcoin buyer in the world has lost money. MicroStrategy would have been much better off doing just about anything else. Obviously, had he bought gold and silver, it'd be night and day. But Strategy could have just taken all that money that it's spent buying Bitcoin and just put it in a money market, and it would have had a positive return, would have got 4% interest a year. So 4% for 5 years, that's plus 20%. Instead, it's down 6%. Now, of course, if you owned MicroStrategy stock, which, by the way, hit a new 52-week low today, it's now down more than 75% from its peak price last year. 75% down on Strategy stock, was down 4.7% today. So it's at 129. Now, yes, before Saylor went on his Bitcoin buying binge, the stock was below $20. I forget exactly where it was, but I'm pretty sure it was less than $20. So if you happen to own MicroStrategy back then, and you sold out, at any point, including even selling out today, you did good, right? You made money because MicroStrategy bought all this Bitcoin. But the actual decision to buy Bitcoin was a bad one because Strategy lost money on the Bitcoin.
The market correction is officially in the rearview mirror, creating a prime entry point for gold and silver mining stocks. These equities have lagged due to investor apprehension, but are now projected to surge, likely hitting new highs well before the physical metals themselves. This opportunity is amplified by a disconnect in the physical market, where premiums are widening as demand outstrips supply, signaling that the paper price drop was merely a derivative event disconnected from real-world scarcity. In stark contrast, the digital gold thesis is crumbling. Bitcoin has plummeted 60% in gold terms since 2021, proving to be a poor inflation hedge. This failure is exemplified by major institutional holders like MicroStrategy, whose average acquisition cost exceeds $76,000, leaving them underwater. With the stock down 75% from its peak, the data suggests that traditional safe havens remain far superior to the unfulfilled promises of crypto. Let's get back to the interview.
If the US dollar keeps falling, which it looks to me like it will, interest rates, long-term rates, they're not falling. They're inching higher, and that could pick up the pace. And the jobs market is collapsing. It's rolling over. We could be printing negative numbers. So they're going to try to do all kinds of crazy things. What Trump may do is put some tariff dividend checks in the mail. What's obvious is that you're the genuine one. And that's what people really liked about Trump the first time, was that he talked about all the fake government numbers and all the bullshit that were being fed by the media and by Wall Street. And yeah, that message resonated, and he won an election that nobody expected him to win. But me, I thought he was going to win because I knew that message would resonate because I was saying the same thing. I mean, a lot of Trump's early stump speeches, I thought maybe the guys were listening to my podcasts and that's why they were writing them, because he really sounded a lot like me. He was saying a lot of the same things that I was saying, and it worked. But then the minute he became president, he changed. All the fake economic numbers became real because he wanted to hide behind those same fake numbers. He wanted to claim, look how great everything is. And so how did he do that? He pointed to the same numbers that he said were fake when they were out under Obama. And so that's not going to work because, it hasn't worked in 3 elections. What works is leveling with the public and admitting what they know. Things are bad. Things have gotten worse. The cost of living is going up, not down. People are going deeper into debt. And that the other ridiculous thing that Trump is doing, and Bassett, again, got caught up in this nonsense. Trump said when it comes to housing, right, he wants to solve the affordability problem. But the most important thing to him is that housing prices don't go down. Well, you can't solve the affordability problem if the things that are unaffordable don't get less expensive. That's what makes them more affordable. Housing is unaffordable because the prices are too high. Yet not only did Donald Trump say that he doesn't want the prices to come down, he specifically said he wants the prices to keep going up. Well, how are you going to solve housing affordability if the unaffordable houses become even more expensive? And then, of course, Scott Bessent was criticizing today the immigrants, saying, one of the reasons that housing prices are up is because of all these illegals that were coming in here bidding up prices, which they really weren't. But if that was the case, then why aren't we thanking them? Because Donald Trump says he loves these high home prices because people are rich now. Homeowners are rich. Well, if they're rich because a bunch of illegals came in and bid up the prices, then why is he mad at them? Because that's exactly what he wanted. He wanted these high home prices to enrich the people that already own homes. But if you enrich the people who already own homes, you make it impossible for the people who don't own homes to buy them. But the fact that it's impossible for the people who don't own homes to buy them means the people who own homes and are rich only think they're rich. They're only rich if they don't sell their home. They can pretend they're rich. They have a very expensive house that they can't sell, right? So as long as they don't try to sell the house, they can keep pretending they're rich. Now, what they can do with a house they can't sell is they could take out a loan against it, right? But if you take out a loan against a house that nobody could buy because the price is too high, who's going to lose? The lender, the bank, because ultimately the house price is going to come down because that's going to happen naturally. If people can't afford to buy houses, the market will reduce the price of a home until they're affordable. But Bessent, couldn't argue that. I mean, he's trying to argue that we got to keep home prices high, but we have to make them affordable. And all they can talk about is, well, we need lower mortgage rates, but we're not going to get lower mortgage rates because interest rates are rising, because we have so much debt. That is the problem. That's why the dollar is falling. That's why gold is at record highs. You've got this huge loss of confidence in the United States. I mean, right now you've got a loss in confidence in foreign central banks. They're buying gold, right? Foreign investors, they're buying their stocks. Bessent is in denial of this. But right now, it's foreigners who are losing confidence in America. But in November, in the midterms, it's going to be Americans. American voters are losing confidence in the administration, in the Republican Party, because they're the ones that are steering the ship of state. And, they're steering it, off this cliff. And the voters know that.
The administration's economic strategy is currently trapped in a housing paradox, in which officials aim to address the affordability crisis while simultaneously cheering rising home prices to protect homeowner equity. This contradiction creates a dangerous wealth illusion. Owners feel rich on paper, yet the market becomes frozen as buyers are priced out. Critics argue that blaming immigrants for these high valuations while celebrating the resulting wealth reveals a fundamental incoherence in policy. You cannot make housing affordable if the price tag continues to soar. Meanwhile, broader economic stability is threatened as the US dollar weakens and long-term interest rates inch higher, undermining hopes for cheaper mortgages. This mismanagement is driving a rapid loss of confidence that extends from foreign central banks diversifying into gold to American voters approaching the midterms. As the fake government numbers fail to mask the reality of rising living costs, the electorate is increasingly aware that the economy is drifting toward a fiscal cliff. Share your thoughts on his analysis in the comment section below. If you find this video informative, please support us by turning on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.